Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, July 8th. Another wild, crazy day in the markets. Greece in the headlines, China crashing, and what we had was a really good sell-off in the morning, and then we just kind of rallied all day with not even a pullback. So not bad of a recovery. However, we're down again about 13 to 15 handles in the ES because China took it on the chin yet again. Another massive sell-off. The Chinese government really trying to contain this and cannot do so. And that's a scary situation because eventually it should and will spill over to the U.S. and the worldwide markets because China is a major player, as we all know, of buying goods and services, and especially a lot of our debt, number one. Number two, a lot of our commodities. And you could see with China crashing, so does the commodity markets. Crude oil took it on the chin big time yesterday and recovered as well. Gold down, all of the metals down, grains down. So, you have to pay attention to what China says. And, I've been saying this for about a year. And, the bottom line is China is a big manipulator of their numbers. So eventually it's going to come to fruition. And now it's basically happening. You could see this in the FXI, is the ETF for China. Literally in a matter of a couple of months, we really just got cut in half. China, Nikkei also really getting hit. Hang Seng down big. I mean, down 5-6% a day in the last several days. So really, really crazy stuff here. Looking interesting, though, for China. Looking for, if you guys are looking to play China, obviously you don't want to catch a falling knife, but if we can stabilize down to these areas here, 38 to 40, even get down a little lower and get some extreme volume where we had a capitulatory sell-off here, we can really start looking to buy into this FXI. And remember, nothing goes just straight down, and if it does, even better of a buying opportunity for a retracement rally. So FXI looking scary here for those of the China markets. Those of you who play the China markets, if you are long, really, really crazy. But this is also why I think China is a bigger problem than Greece. And that's where we're getting a lot of this volatility. Now, I mentioned about a little bit of a roadmap of what I'm expecting. Now, we are getting some weakness here. We should get some sort of a bounce in the next several days, maybe going into that second week of July. And that's where I think we might get a top, an interim top, a real small top, and then we sell off again going into August and then rally and then sell off. We have that major correction come September, February, where the markets are usually notorious for a pullback. And again, that's where we are looking for some sort of a really good correction. Now, we are getting a sell-off now. I was hoping that we'd rally first and then get that sell-off going into the end of July. So things are still a little bit of a mixed bag here. I still need to see where this market is headed before we can call some sort of a tradable top anyway. We may have already had that, and then when markets are already moving lower, as you can see. But if you go into the daily charts, I could show you, we had a few day sell-offs, but really holding in pretty incredible, the markets. I mean, the ES, the E-mini contracts trading right now at 2059, where, you could have easily said, look, we probably get down to the 2000 and break 2000 with China crashing, Greece problems. But again, buyers, the dips are still around, still looking to buy that dip. And you could see here, we had that bear flag. We broke out of that bear flag, broke down all the way down to here, and then rallied back and closed at its highs, which is very bullish. But then you have this morning, we're down again. So that's not a good sign. Market has no memory from day to day, and it's trading just totally off a headline. So not a good thing. And if you are, again, are new to this volatility, step aside or reduce your risk by reducing your share size, okay? But SPDR's, again, still above the 200, which is good, but we're going to open yet again below the 200. So this is all meaningless, guys, because we're going up, down, up, down. We need to see a consistent pattern of lower lows and lower highs, or higher highs and higher lows. We're not getting that right now. Obviously, the big picture, we are getting the lower highs, lower lows and lower highs here, as you can see here. But it's still a big mess in this area. So we're going to need to either break down for below this little area of support and just start to follow lower, or we start to break back above again. So again, the last 5-6 days are not giving us much of anything other than the fact that the markets rally and then they get sold into again. So that's also not a good sign. IWM, you could see right to my number. You could see this. I had this horizontal trend line area, and it went right to the penny. You could see that. And just below that is the 200-day moving average. Watch this IWM. I had mentioned if it does break lower and starts to trend lower along with the transports, IWM usually tops before the general market does, which is the Russell 2000. If that does happen, look out below, guys. Then I think we're going to get into that full-fledged correction that we're looking at sooner rather than later. Okay, but IWM here looking weak. But I like the big long-legged doji here. You could see, but right, this is a good sign. But we need to build on this now. This is where we need to build on in order for us to have this indecision candle, so to speak, if you will, or a tradable bottom. In order for us to build, we need to take out this high from yesterday, and as well as the other indexes. If you look at the transports actually held in, recovered nicely. But again, really the target is going to be this area here, this interim low. Again, with this volume zones, you can see here, this thin zone. We're into this thin zone now. We probably back and fill a little bit, and then fail one more time into this area, which is going to be support, and really not a lot of support, if you could see that. Okay, so that's not a good sign as well. Diamonds, again, got back above the 200. Again, the high or the low for today's candle is going to be really important, guys, okay? And lastly is the Qs. I'm actually surprised that the Qs actually is holding in pretty well. And again, only because China, huge technology-driven market, technology isn't really taking on a chin as of yet. So we'll see. Let's just take it one step at a time, guys. There's really not much more we can do to see we get a resolution out of Greece. That would help stabilize the markets. And if China can stabilize its markets, then I think we could probably rally and at least try to tag that 2096 in the cash, the SPX cashed high, and then maybe even go higher before we get a correction. And that's what I'm really looking at. Markets are still in the uptrend on the weekly chart, but scary on the transports like I showed you yesterday. Just keep that in mind when you're trading, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.